Hello everyone. Today we'll be diving into the world of specialty chemicals, a sector that's increasingly shaping industrial innovation and economic growth. In this presentation, we'll explore the value chains, market dynamics, risks, and even the future outlook. So, let's start with the fundamental question. What exactly are chemicals? Chemicals are the building blocks of everything around us, from the water we drink to the materials we manufacture. They can be simple, like say for water, or complex, like benzene, which is used in making plastics, dyes, detergents. Chemicals are the building blocks of all matter and find countless applications across industries, science, and across our daily lives. So, what are the types of chemicals? Chemicals are broadly classified into two types. One is organic, the other inorganic. Organic chemicals are carbon-based and derived from petroleum, while inorganic chemicals come from minerals and are used in various segments such as fertilizers, electronics, and even others. Now, moving on to organic chemicals. These are chemicals which are primarily defined by the compounds made of carbon, generally carbon hydrogen, but they could be carbon, nitrogen, oxygen, etc. Starting from basic crude or petrochemical feedstocks, we move through chemical products such as benzene, toluene, and ethylene, amongst others. These are further transformed into intermediates such as phthalic anhydride, phenol, acetone, and for example, maybe say a vinyl sulfone, which then feed into end-use products such as dyes, pigments, rubber chemicals, and plastics. Now, inorganic chemicals, in contrast, are compounds that do not contain the carbon-hydrogen bonds. Inorganic chemicals have a different value chain. They generally involve elements such as chlorine, fluorine, bromine, etc. These are processed into, say, a caustic soda, chlorine, fluorine derivatives, amongst others. These chemicals find applications in water treatment, electronics, fragrances, and many such more products. So India's strength lies in its ability to process these intermediates into high-performance specialty chemicals through a feedstock availability could be a concern in certain segments. Now, if one look at chemistry, chemistry enables over 96% of all manufactured goods. The applications are extremely diverse and touch almost every aspect of our lives. From agriculture to aerospace, chemicals play a vital role in sectors such as pharmaceuticals, textiles, electronics, and even wind energy. Looking at global chemical sales, we can observe significant growth and shifts in market share. The world chemical sales grew from roughly 3 trillion euros in 2013 to over 5 trillion euros in 2023. China's share now is over 40%, and this clearly shows China's growing dominance in the global chemical market. Now let's understand the difference between commodity and specialty chemicals. Specialty chemicals are high value, low volume chemical products designed for specific applications. Unlike commodity chemicals, which are standardized, produced in bulk, for an example, say sulfuric acid or maybe ammonia, specialty chemicals are tailored to meet precise performance requirements. For example, agrochemicals, pharmaceutical intermediates, dyes, and maybe coatings. They often require advanced R&D, complex manufacturing processes, and close customer collaboration. Now, this customization leads to higher margins, but also demands technical expertise and regulatory compliance. Now, despite India's growing chemical industry, it's surprising to learn India is a net exporter of chemicals. Of the top 7 economies in the world, India is the only net importer. However, if you look at the specialty chemical space, India is a net exporter. Now, if you look at specialty chemicals, India's specialty chemical market is diverse. We have presence across from fragrances and dyes to agriculture and pharmaceuticals. Now, the way it is expected, growth should be across all segments over the next decade till 2030. Recent data shows that there is a slowdown in chemical production in European Union. This is partly due to higher energy costs post the Russia-Ukraine war. Data also suggests that US and even India have shown resilience. This shift could benefit Indian manufacturers going forward. Now, this is quite interesting. Over decades, leadership in chemical production has shifted. In 2003, Europe was the largest player in chemicals. But as on 2023, China now leads with over 40% market share. India is yet emerging. India may not follow China's trajectory going forward, but we believe that India has strong advantages to expand in the specialty chemical space. India has a competitive edge in labor costs, plant capex, and even environmental compliance. However, when compared to China, China still leads in scale. In addition, China has access to relatively cheaper petrochemical feedstock source, largely natural gas and crude oil which they get from China in a pipeline. However, we do believe that India can grow in the future due to its advantages. Now, in terms of cost comparison with other countries, India offers lower manufacturing and power costs. And this is across most global players. This makes India an attractive destination for chemical production. And it is not just cost when one looks at labor, it is also availability of a large pool of chemists and chemical engineers that position India favorably in the global manufacturing landscape when we refer to chemicals. The Indian chemical industry is experiencing significant tailwinds. The industry has been benefiting from supply chain disruptions in China. This initially began in 2015 with strict environmental norms imposed by the Chinese government. This was followed by the US-China trade war, and then we did see the COVID-19 outbreak. The China Plus One narrative has encouraged a lot of multinational corporations to diversify and de-risk their supply chains away from China. Indian companies too have responded by scaling up their operations and focusing on strengthening their technical and R&D capabilities. This has increased businesses from MNCs. Now, despite its growth, India currently accounts for just 3% of the global chemical sales compared to China's 43% share. This represents a huge opportunity for India to gain market share going forward. Domestic demand is surging, fueled by urbanization and a growing middle class. The manufacturing sector is also expanding, further boosting chemical production and consumption. Government policies and FDI inflows are catalyzing growth. The sector has received significant budget allocations and investment. India allows over 100% FDI investment under the automatic route in the chemical sector, except for hazardous chemicals. Now, in terms of risks, India faces some of the highest tariffs in the US versus other Asian and European countries. Now, this can impact competitiveness, but we analyzed the US Spec-Chem market, and what we saw that over 75% of the US Spec-Chem imports were exempt from tariffs. Now, there are a lot of exemptions which the US has given, largely for agrochemical and fertilizers, even refrigerants like R134A. And at this point in time, pharmaceutical products are exempt from tariffs. Yes, some segments could get impacted if this 50% plus rate continues for them, because at that rate we would be rendered uncompetitive. Another key risk is the overcapacity in China. What we have seen is that the internal slowdown in China has led to more domestic production being pushed into export markets, and this has created competitive pressure. China's chemical overcapacity has led to pricing pressure globally. Indian producers and exporters are feeling the heat, and we do believe that if that changes, there could be huge positivity going forward. If we look at it in terms of global markets, regions such as Europe and Central Asia, the Asia Pacific region, which together contribute almost 50% of Indian export market, are currently experiencing some sort of consumption slump. This global economic deceleration directly impacts the demand for chemicals, which will affect India's export performance. However, the long-term growth trajectory, we believe, remains intact. For growth, feedstock is very important. India is largely self-sufficient in higher carbon feedstocks if you look at the carbon chain such as C4, C6 and C8. But we rely heavily on imports for C1, C2, C3 and C7, which poses a challenge for downstream industries. This significant reliance on imports for these basic fundamental building blocks and their derivatives represent a key vulnerability, and this risk is present for the Indian chemical industry. China, for example, has a significantly higher availability across not just the carbon chain but also many inorganic chemicals. The chemical industry, by its very nature, carries inherent risks, making it susceptible to industrial accidents. History is unfortunately replete with tragic examples. History has shown us that the devastating impact of chemical accidents from Bhopal to Tianjin in China, and it underscores the need for stringent safety protocols. Regulatory vigilance is essential. Now, this risk is present across all the countries across the world. Despite the cyclical nature of the chemical industry, specialty chemicals have demonstrated strong performance. This chart compares the total shareholder returns, that is, the CAGR of the specialty chemicals basket against the Nifty 50. Over a 10-year period, the specialty chemicals basket has significantly outperformed the Nifty 50 index. Comparing the returns from July 2014 to June 2022, the specialty chemicals basket has generated the highest returns compared to its downstream sectors. However, from July 2022 to June 2025, the specialty chemicals basket saw lower returns due to a number of factors such as China dumping, the inventory destocking due to higher interest rates. This suggests that while specialty chemicals have seen strong outperformance in the past, their relative performance might fluctuate in the short to medium term. There have been clear phases of strong outperformance, especially during periods of global demand growth. Also during periods of supply chain disruption and domestic policy support. If we look at, there are certain segments which are a lot more attractive compared to others. Now, these segments are selected based on several criteria: market size and growth, competitive cost of production in India, historical performance, and macro trends. Segments such as pharma, agrochemicals, and coatings are particularly attractive due to the strong domestic demand, feedstock availability, and the innovation potential going ahead. Pharma is India's largest opportunity in specialty chemicals. India's penetration in global pharma CDMO is still very low. With rising healthcare demand and export potential, pharma intermediates are a major growth area. Agrochemicals. The outlook for crop protection is expected to rebound. Research suggests that inventories are at an 8-year low. Margins could recover due to this inventory restocking going ahead. China's anti-involution policy aims to curb overproduction and promote quality. Now, this policy could lead to a decrease in the overall chemical capacity in China, which potentially would alleviate the global oversupply issues, and this would provide a fillip to other chemical producing nations, hopefully like India. As per Niti Aayog, the chemical industry is expected to grow at a CAGR of over 9.5%, reaching almost $1 trillion by 2040. India's share in the global chemical consumption will rise significantly. This growth will be driven by rising demand in the end user segments for specialty chemicals and petrochemicals. India's focus on Atmanirbhar Bharat, coupled with strong technical capabilities and policy support, we believe will position India as a global hub for specialty chemicals. Finally, let's look at the current valuations of the specialty chemicals basket. Valuations of stocks remain elevated, reflecting investor optimism. However, if one looks at it, they are still within the range of historical averages. With this, I thank you for your time. I hope this presentation has given you a comprehensive view of the specialty chemicals and its immense potential going forward. Thank you.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.